Step 4 is to review and adjust your spending plan. It's the final step in our spending plan process, and it's the step that generates success. First, review your spending plan. Do you have the same amount coming in as going out? Does your spending plan include an emergency fund, savings, any other personal goals? If you have more going out than coming in, or you don't have medical insurance or an emergency fund, then your spending plan needs work. If you can't balance your spending plan, then your options are to reduce spending, increase income, or a combination of both. If you're on a fixed income, see our fixed income financial tips. For everyone else, look first for any non-essential expenses you can reduce or cut. Unless you move, you probably can't change what you pay in rent or the mortgage. But food, cable, phone, clothing, and other variable expenses are usually areas that can be reduced. Comparison shop. Can you save money by switching service providers? Can you reduce any services that are not necessary? There are times when we have to take a hard look at the way we live. Every money leak you can stop, every cent you can trim, helps you reach your financial goals. If you still can't balance your spending, after cutting your expenses, look for ways to earn more income. Can you get a second job? Perhaps rent a room in your home? Finally, are you willing to make drastic changes to achieve your financial goals? You may have to make hard choices, but there are always choices.
This all sounds a little grim, though, doesn't it? Well, I'm here to tell you that as you make changes to take control and reach your financial goals, it's important to have a little fun. We all need an occasional treat, something to look forward to, even if it's just a special dinner you make at home. I used to like to go to fancy coffee bars. I like the way they smell, I like the music and the cushy chairs, I like all the little shakers of stuff to sprinkle on top of your coffee. But they'd become a money leak for me. So instead of cutting out something I really enjoyed, I made it a treat instead of a habit. Now I treat myself to a coffee place once in a while. I don't feel deprived, but I save a lot of money. And I actually enjoy my coffee house visits more because now they're rare, so they're more special.
Another key to keeping your spending plan on the road and preventing any wrong turns is to keep proper financial records. Okay, did I hear a groan? It's not that bad, I promise. I know getting started can be hard. I think there are two main reasons that people have trouble keeping good financial records. One is not having an organized system, and the other is not knowing what to keep. To begin keeping financial records, you may want to set up a filing system. The two main types of financial records everyone should keep are those for taxes and the records needed to monitor your spending plan.
Tax records generally include tax return and supporting documents, such as W-2s, 1099s, bills, receipts, invoices, mileage logs, canceled or imaged checks, mortgage interest information, retirement plan contribution documentations, and charitable donation receipts. In other words, all proof of income and records to support all the deductions or credits you are claiming on your income tax return. The IRS has 3 years from your filing date or the date of an amended return to audit you. However, if the IRS thinks you underreported your gross income by 25% or more, they will have 6 years from the date of filing to challenge the return. There is no time limit if you failed to file a return or filed a fraudulent return. We therefore recommend keeping most tax records 7 years from the last date of filing, indefinitely if you have not filed a return. Keep the W-2s until after you retire, as proof of Social Security contributions. You will only need them if you believe you're entitled to a larger Social Security benefit once you retire.
When you are ready to discard old documents, remember to shred them. This will keep them out of the hands of any potential identity thieves. There are some circumstances that require keeping records for a longer period of time. For instance, records related to a business or rental property, retirement accounts, home purchase or sale. These should be kept indefinitely. Keep the annual statements for any retirement funds and brokerage accounts you own, and any receipts for stocks or for large purchases that you are insuring or plan to insure. Additional information on record keeping is available from the IRS at www.irs.gov.
Keep the actual bill only if you need it for tax purposes. For those records needed for your spending plan, a spreadsheet is better because you'll need the information but won't need the actual bill. Keeping a spreadsheet is a good idea for 2 reasons. 1, it's easier to view your spending per category if you have it on one spreadsheet. And 2, the less paper you have, the more organized and in control you'll feel. Record keeping isn't hard, it's just a new habit to learn. Remember your spending plan, tracking your spending, and record keeping are all habits that'll give you the control to reach your financial goals.
Now let's have a quick review of the steps to create your own spending plan. First, figure all net income and do a little math to accurately convert it to a monthly average. Second, do the same thing for expenses. Convert your variable and periodic expenses into monthly averages. Third, track your expenses to discover money leaks. Record every penny you spend for at least a month. Fourth, once you've identified money leaks or an imbalance in your spending plan, make adjustments to fix the problem. Create a spreadsheet to track your spending, and keep financial records for taxes for at least 7 years.
Now I want each of you to ask yourself, what is your number 1 financial goal? Take a minute, write it down. Got it? Okay. With that goal in mind, I just ask you, is achieving that goal worth doing the work to make an accurate spending plan? The 30% of people who do are much more successful, and the bottom line is your success. There's no get-rich-quick way to reach your goals. The spending plan is work, but it's the vehicle that will take you where you want to be. And it will get easier. In a few months, it will be second nature. Making an accurate spending plan, tracking spending, and reducing money leaks are all work. But for the spending plan to be a success, you need to review it often and adjust your plan accordingly. So once you've created your plan, don't let it just sit in a drawer. Review it at least once a month. Track your progress and adjust it when you need to.